Well, good afternoon, everybody. Welcome back to another episode of the Industrial Real Estate Show. I am pleased to be joined by an investor who has a 14 property portfolio in Michigan, built it all himself, no outside investors, has some debt. I think he's been paying that down pretty steadily over the years, but built a portfolio right from scratch. And it's going to be very exciting to get some more insight into how he did it, why he thought industrial would be a good investment vehicle, and perhaps what he's looking forward to in the future as well. So with that, Kip Northrup, thanks so much for joining me on the show.
Absolutely, 100%. I appreciate the opportunity to tell my story.
Yeah, I love it. Let's start right at the beginning, because I know that you had a very successful business that you still operate. You're 110,000 square feet in one of your buildings is for your business. Let's go all the way back to the business itself on how you started it, what it is, what it does.
Okay, well, we have to go all the way back to like as an 8-year-old. I'm a self-professed fish geek. I love aquariums, and I had a passion for aquarium keeping. And as a senior in high school, I decided to start cleaning fish tanks after school for doctors and nurses or dentists and places like that, and built up a pretty good route, if you will. Ended up hiring one of my buddies, and the two of us would clean fish tanks from about 2:30 to 5 o'clock every day. And when I graduated high school, I went to Eastern Michigan University for 4 years. And when I got done with that, I thought, I really don't want to go work for somebody else. I know I want to work for myself. So I came back to the area that I was raised in here in Saginaw, Michigan. And I bought a pet store, actually, to operate my maintenance business out of, and my aquarium cleaning company. And through that, actually had people come in and ask me about ponds and waterfalls and fountains and supplies for that. And I remember calling my distributors and asking them if they carried those products. And because they were seasonal, they said, no, we really don't carry that stuff. You'll have to special order it. So I remember thinking, like, man, somebody should really start a wholesale distribution company focused on water features and ponds and waterfalls. It didn't click for me to do that at the time. And so fast forward a couple of years, we started to get requests for installation. So I started installing ponds, and it quickly became obvious to me that I could make as much profit in a couple of days installing a pond as I could running a retail, pet store for 2 months. It was a tough business. PetSmarts and Petcos were popping up all over the place and just really competing with the mom and pops. So we decided to sell the pet store and focus exclusively on the installation and maintenance of water features. And we moved and purchased our first property, which was about a 2,400 square foot office warehouse here in Saginaw that we operated our installation maintenance business out of. And that grew successfully for several years. And through all of that is really how we started to come into commercial real estate, because as our company grew, we started to add on additional warehouses and different space to accommodate our growth.
That's so impressive that and I love the entrepreneurial side starting as a kid, because I was the exact same way.
Yeah.
I was trying to do everything possible to earn money as young as 8 as well. So you and I are very similar that way. I love how you took the business from 2,400 square feet to 110,000 square feet that you're now in. That's huge growth. And I mostly want to get into your portfolio, but I'm still very interested in even that first property that you had, the 2,400 square feet. What made you decide to buy it versus leasing it at the time?
So I had always been interested in real estate. And in fact, I had worked a little bit with a guy that was managing properties. He would buy and sell, and always on the residential side. And so I just said, hey, would you mind if I paddled along with you? And I mean, I'll help do some work or whatever. You don't even have to pay me. I just would like to learn about real estate. I just something that inside of me that just feels like this could be a cool experience. He said, yeah, absolutely. So for a couple of months, I helped him. And I quickly realized I don't want to do residential. Like, it's just not for me. I saw everything that he was dealing with and everything. And I just thought, this isn't exactly what I want. The reason I had asked him if I could do that, because my business was struggling. Like, we weren't making great money. We were, I was borrowing money to make payroll and pay rent and everything else. And we really literally were struggling. I mean, I had the IRS calling me, threatening liens on my assets. And pulling money out of my bank account and stuff like that. It was tough. And I mean, there was a lot of times where I thought, man, I'm just going to give up. Maybe real estate's an option. Maybe I can get into that. And like I said, I just was with him long enough that I thought, no, this isn't the real estate that I want to be involved with. So I refocused back on my business and started to grow. Finally started to kind of turn the corner with that a little bit and started to see the light at the end of the tunnel and started to expand. But when I moved and focused on the installation and maintenance, I knew from my experience with him that I wanted to own. I didn't want to rent anymore. And I thought, I found an opportunity where I could buy one on a land contract. And so, the building wasn't necessarily perfect, but the land contract opportunity was perfect for the situation that I was in at the time. And so I purchased that first building, and that became the start and the foundation of everything that we've accomplished ever since.
So as you started growing the business and you needed more space, so you had to keep adding more buildings, did you simultaneously start investing in other properties, or did you hit a scale first of the business being stabilized and then you started looking at investment properties?
Yeah, so we hit a scale first. I mean, that first 2,400 square foot that I bought lasted about 2 years, and then all of a sudden, our customers were demanding more from us. They wanted more variety, more products. We started to bring in product from other manufacturers, and with that, we ended up adding 6,000 square feet of warehouse space onto that building. And then, like a couple years later, the building right next door came up for sale, so I bought that. And then a few years later, the one across the street came up for sale, and we were at a time where we were ready to grow. So we purchased that property. And so the first 4 or 5 properties were really purchased for owner occupied situations where it was my company that was occupying these and operating out of them. But at some point during that time, probably around 2015, is when we finally had an opportunity to kind of look at real estate from an investment standpoint. And we bought our first office building, actually, which unfortunately I still have today. It was a great property for like 8 years. And then now it's been sitting vacant for the last 2 years because we all know what office has been the last few years. It's been tough. And so I'd like to sell that one. I'm typically not a guy that likes to sell my properties, but in that particular case, that's one that I'd like to get rid of. But that was the first one that I really bought as an investment, and it was a great investment for the time being. But we slowly started to look at opportunities, and had a little bit of extra cash where we could invest in it and get the down payment, and then get a mortgage on the rest of the property, and the property would cash flow for us. And so it just started to work out.
So I noticed your portfolio, 14 properties, all in northern Michigan, Saginaw, which you said is about 2 hours north of Detroit, give or take. And,
Correct.
and the most of your properties are in that 5 to 20,000 square foot range. You have the 126,000 square foot building that your company occupies 110,000 of. So mostly that's for your property. But is that what you're trying to target, is to try and be in that 5 to 20,000 square feet? Is that by design, or is that just opportunities that have come available?
I think it's more, well, to be honest, in the beginning, that's where my budget was. I mean, at 5,000, I couldn't touch 125,000 square foot property. I didn't have the wherewithal to do it. So you buy a 5,000, and then you buy a 10,000, and then you buy a 15,000, and it just sort of happened that way. I think also those are the types of properties that are most commonly built around here and are available around here. We've got some large corporations that are pretty big industrial type warehouse places, but aside from that, you've got a lot of those service-based businesses and those smaller wholesale distributorships that only, that are perfect in a 5, 10, 20,000 square foot property. So that was what was available, and that aligned with my budget at the time. And so that's probably why, logically thinking, like, that's why I have so many of those properties.
Yeah, that's a great point. When you were buying these, were they vacant? Did you have tenants in them already, combination, or how did you look to eventually get these stabilized?
So my formula, if you will, if I have had one, I didn't set out with. I,
Why can, oh, okay, we're good.
I didn't set out with a specific formula of, this is how I'm going to do it or whatnot. But really, what has really kind of come to fruition for us is we like to buy a property that needs a little work, right? It's not the nicest property on the block. It's partially vacant or completely vacant. So we like to buy those, fix them up, invest some money into them, lease them out, get some tenants for them, and then hold. And that's kind of become my strategy over time.
Yeah, I think that's a great strategy. And then the properties that I've bought over the years as well, I have an indefinite hold pattern. I don't ever want to sell them, and unless something happened like that office building where it's just a complete change in the market or something disrupted it. That that buy and hold strategy is pretty powerful. Are you planning on continuing to grow? I noticed on your website you had a banner saying that you're still looking to buy properties. Is that still the mandate?
Yeah, absolutely. I've got two right now that I'm strongly considering, just kind of going through the due diligence. I try not to make any emotional decision when it comes to real estate. I mean, there's some properties that I look at and I just fall in love with them. And I'm like, man, I want this. Like, I got to have this one. And those have turned out sometimes to be some of my worst experiences. And so I tend to take a let's wait and see approach, and let's take a deep breath and let's reassess and let's continue to think about these numbers and what can we do with this property? How can we fix it up? What type of tenant might be wanting to lease this type of property, and are those types of tenants around? And so I tend to not try to make super impulse decisions, because I as an entrepreneur, we're kind of like fire, aim, and we should be more aim, fire. So I've tried to slow myself down. My wife is a great balance to my go attitude, and she's much more conservative in her approach, and so I think that helps balance us quite a bit. But we are looking to add to our portfolio. I do like to hold, so I add as I have the cash to add, right? And so now I've gotten to the point now with enough cash coming off as we've paid down mortgages and as rents have increased and we've created more equity in our properties. I don't ever go out and borrow the equity back out of our properties. I try to pay balances down as much as possible. And that's really to appease my wife in a lot of ways. But I take the excess cash that comes off of those and any, excess business cash that my company generates, and I use that to buy my next property. And recently we're fortunate enough that situation is usually an all cash offer then, where I can just pay cash for a property and not have to finance it at all, especially with the interest rates the way they are. And 7% isn't terrible, but it sure feels a lot worse than 4% that we were getting 4 years ago. And so it does change the feeling of it a little bit. So whenever we can go in and pay cash, that's what we try to do.
Yeah, congratulations getting to that level. I think that's a stage where every investor should strive to get to, that you're not always struggling to get that next dollar so that you can leverage it into $4. I think getting to the stage where you have that cash flow and are able to do it without the stress of fluctuating interest rates and everything goes with it. Congratulations on that. I mean, that's a testament to your business success and then just strategically buying the right properties over time. I'd love to jump into the process of how you look at deals. So property comes across your desk, someone sends it to you, or you just happen to see one that you think could be interesting. How do you start digging into that property to identify things that you really like about it, or perhaps red flags that would just be a deal breaker for you? How would you go through that process?
So I'd first start off by telling you that every property that we've purchased has been one that we've found.
Hmm.
Unfortunately, I don't think that the brokers in our area are overly aggressive. And as many properties as we have purchased, I would feel like I'd be the guy that if I ever listed a property, I would send it to me. Like I would be like, maybe Kip will buy it. I don't know. At least I'm going to put his eyes on it and send it. And I literally have to go to their websites. I have to go to the online places and do searches and look at stuff. If I haven't, because a lot of times, as I mentioned before, if I'm driving by and I see a property pop up for sale, I'm going to go check that out and I'll go look at it online and I'll see who listed it and read all the information on it. But I typically have to just go out and do those searches myself and then identify properties that I might like. And as part of that process, I drive by them. I kind of drive through them and take a look at them. If there's tenants in there, I'll walk in and pretend to be a customer, just to kind of get an idea of like, what's it look like on the inside. I don't bother anybody or anything like that, but I try to get a feel for what the property looks like, and am I going to have some major improvements to make, major investments that I'm going to have to put in. And then I look at the cash flow of it. I look at either what the rents are or what the rents could be. And then I compare that to the cost of acquisition and the cost of the improvements that I'm going to have to put into it. And I figure out whether I feel like it's going to be a good investment or not. And honestly, I did all of this stuff prior to understanding what a cap rate was. I mean, I had no knowledge of really what commercial real estate, like, I'm not that smart when it comes to it. I just looked at it and thought, yeah, I could buy that. It's going to cost me $1,000 a month, and I'm going to get $1,500 a month in rent. So that's plus 500. That sounds like a good deal. And so that's literally how I would make my decisions early on. I'm a little more in depth now, knowing what I know, thanks to many experts out there and stuff like that. But it's as simple as just looking at it, and I run the cash flow analysis on it, and I just take a look at it. I also like to look at whether there's a cost segregation opportunity there. I love depreciation. We have significant income being generated, and so I try to offset that as much as possible through legal tax opportunities that are out there. And I think cost seg is a good opportunity for real estate investors to take advantage of.
Yeah, would you mind going into that a little bit more detail? Because I think that is a underappreciated element of real estate, is to be able to do that cost segregation. If you wouldn't mind going into it a little bit more from your perspective on how it works.
Yeah, absolutely. So when we look at a property, sometimes the property is vacant, but the previous tenant left all the office furniture and all the refrigerators and all the break room furniture and the lockers and some equipment out in the warehouse. And there's a lot of things that are left inside. And typically the broker will say to me, like, we'll have all this stuff cleaned out before closing. Don't worry about all these things. We'll get them out of there. And I'm like, no, I want you to leave them. Like, I want this stuff here because I'm gonna assign a value to those things, and we're gonna depreciate that stuff and do a cost seg on that. But my CPA had brought me, taught me about cost segregation probably 7 or 8 years ago. And she basically, we walk through a facility, and she says, we look at how much we can assign fair market values to the things that are here. And then you just go and add all that up, and then you get your depreciation on that amount off your income that first year. And so it's sort of that accelerated depreciation method is what we're looking for.
Yeah, I at some point I'd love to even bring on an accountant or somebody that specializes in that, because I think that it's a very boring topic, but I think it's, for a real estate operator, it's also very insightful. And
Yeah.
then you also made a really good point too about how when you first started, you weren't focused on cap rates or any of that. It's just cash flow. And I remember talking to a guy by the name of Michael Golden, who he has 3 master's degrees, including one in real estate. He's got one in science and an MBA. So really smart guy. He has a development company as well. So he's an academic, but he's also on the street side. And I remember him saying is that it all depends on who needs to look at the analysis of a deal. There's some people that might go and run a full Argus analysis and put a whole bunch of assumptions and inputs and develop a really sophisticated model that is really complex. But then you might get a guy that just says, well, I like this building. I think I can rent it for X and my costs are going to be Y. So yeah, let's go ahead and do it. And
Yeah.
who's right? Well, whoever wins at the end of the day, I guess, is right. And the sophisticated models might be great, but sometimes it is really just as simple as identifying a property that you're comfortable holding for a long period of time. You think you're going to have tenants in there. Oh, sorry. Well, I think we had somebody cut in there. So yeah, I really like that model of keeping it really simple at the beginning. How has that evolved though? Now you did allude to that you are looking to add a little bit more analysis in it. So you started very simple. How has it evolved over time?
Um, well, honestly, I still use that same philosophy as I go and analyze a property, and it comes down to the cash flow of it for me. Where I start to look at cap rates and some of the other things like the investment tools is, for example, we bought a retail building, 10,000 square foot, two tenant property, and we bought that for 1.14 million, and it's generating about $10,000 a month in base rents, and they're triple nets. So um, prior to knowing what a cap rate was and seeing what cap rates are today, when I started to, and by the way, I almost lost that deal over $10,000,
Hmm.
and I was. And I finally said, fine, I'll pay the extra 10,000. And I ate it and I walked away. And again, never get emotional about real estate. I started to get emotional about it, and I was going to just walk away from it because I was a little annoyed with the seller and the extra $10,000. I ended up paying it, and now looking back, I thought, holy, I would have lost one of the biggest opportunities, one of my biggest gains, one of my best wins. And when you assign a cap rate to that property is worth significantly more than what I paid for it at the time. And so that then starts to make me think like, well, maybe I should be selling some of these properties because that'll give me even extra cash that I can go out and I can start to buy the next couple deals with, and really start to build long term. But I just haven't been able to bring myself to that philosophy yet. And I know there's a lot of people on X and out there in the world that push, you buy it right, you put a little bit of money into it, you get it leased up, you get the market rents up, or get the rents up to market rates, and then you sell it at a cap rate that based on that day, and you double your money, or you make $1 million or whatever the number is, and then you take that money and you use that for the next deal. I just Maybe it's because I don't feel like there's enough deals in my area for me to be hopping like that. And I'm also just focused on, I'm 51 and I'm thinking like, I don't know how long I'm going to, live, not live. I hope I live a lot longer, but I don't know how long I'm going to, before I retire. And I've kind of set myself up for like, this is my retirement income, right? Like this is my money that I want to get in retirement on an everyday basis. So if I sell them, I don't have that, like that goes away. And so I like to hold them still. But that whole cap rate analysis and some of those other investment strategies, they all kind of come into play I think when you're more of a, I don't want to call it a flipper because that's, I think, kind of a bad term, but more of a person that's not going to hold for long term, and they're going to try to sell those properties within a couple year window.
Yeah, it's so very well said, and I couldn't agree with you more on that philosophy of wanting to just hold because I've said to a lot of people that in real estate it's really really difficult to have success in the short term. Like you almost have to have luck on your side, and it can go in the short term it could go the other way too, where you could have bad luck on your side. It's really hard to make money flipping properties, buy something, stabilize it, sell it the next year. I think that's really tough. But I also think it's almost impossible to not get rich over the long haul. And something as simple as just buying one property. Buy one property, hold it for 20, 25 years, pay off
Yeah.
the mortgage, probably get some appreciation in there, even very modestly, even if it just keeps pace with CPI, it might double in that time. So now you have a paid off asset that's double and it's cash flowing. It's really hard to actually mess that up. You'd have to almost purposely make mistakes to mess that scenario up. And if you
Yeah.
could do that on scale and add a few properties over time, then all of a sudden you like you alluded to is that you have a really nice nest egg when you're retired that's paying you without having to stress about it. And I think that that's such the opposite of what a lot of institutional real estate looks at, where it is very transactional. They are just looking at it purely as a numbers game where they're trying to make a set yield over 5 years, and then they want to have an exit, and they're always rolling things over. And that's a business at that point. That's not owning real estate. That's actually a business. So I agree with you. I like that long-term hold approach. You're sorry, was you say something?
Well, I was just going to say, you're absolutely right. It's not a get rich quick overnight type situation, and you almost you don't have to necessarily get lucky. And I mean, we had situations throughout our process where things could have gone, you know, tragically different. And like the building that I'm sitting in today is the 126,000 square foot property that we bought in 2019. We closed on that in June of 19. And I had to sell my wife on this property, and we were in four properties that totaled 45,000 total, 40 to 45,000. And I told her, I said, when we buy one more building to operate our business out of, we will be at the same mortgage as what we'll have at this new building, which is 3 times bigger than what we're in today. So it makes sense financially. And she said, she's always, I call her the black hat. You're always wearing the black hat. You always have all the logical questions that bring me down and, you know, and make me think like, oh, maybe this isn't such a good idea. But I need those questions. I need her to ask those questions. And she always says to me, think of how much money I've saved us over the years. And I go, I know, but maybe you stopped me from doing that one deal that would have been huge. And so we just chalk it up to, well, we'll never know. But anyways, and I told her when we bought this large building, and it was a big leap of faith. And I said, 3 things would have to go wrong, all 3 of them, in order for this to be very bad for us. And I was like, the first thing would be, it costs us way more money to retrofit and to bring the building up to code than we're expecting. The second thing is, our main operating business would have to have a start to decline and have a decrease in sales and also decrease in profits then. And then the third thing would be, the 4 buildings that we're going to leave would, if we don't find tenants for them and we have to continue to pay them and have the expenses for them, then that could be bad. But all 3 of those things have to go wrong. Well, I can remember we went to an engineering consultant who was working on the HVAC system here, and we got some very bad news about how much it was going to cost to retrofit our property here. And we got out into the car, and she unloaded on me. And she was like, you said 3 things. Well, here it's costing us $250,000 more to do the HVAC. Our sales are declining at our main company, you know, and we don't have any leads on renting out any of our other facilities and stuff. And this was like June, July of 2019. And she was right. All 3 of those things were happening. And I was like, man, I mean, I convinced her of this. I mean, she believed in me. She trusted me. And it's overwhelming power of feeling of that. And so I was like, man, we got to fix this. We got to figure these things out. And so fast forward through the summer, you know, things started to get a little better. We were able to wrap some of the additional expenses into our mortgage for the property. And then we leased out our 2 of the 4 properties. They were the smaller of the 2, but it was progress. And then all of a sudden, we moved in here in November of 2019. And a couple weeks later, she had 2 appointments. One the same morning, one was at one property and one was at the other. And both of them signed 5-year leases. And it was like, hallelujah, thank God, because it could have went way worse than that. And that was November of 2019. And we all remember what happened in March of 2020. And I had to relive it all over again. And it was like, what did I do? And I thought, all right, we found tenants. What is this COVID thing going to do to my business though? And I mean, we got shut down. And thankfully for us, being in the landscape industry, if you will, people were staying at home. They weren't taking big vacations. They were remodeling their properties. And in a matter of 18 months, our business doubled. And so we were super blessed. I mean, that it could have went bad. It ended up turning, you know, positive for us. And then because of that, it started to really sort of snowball for us. And that's when we really, I mean, the last 4 or 5 years, I think I've purchased 6 or 7 properties. And that's really where things started to take hold for us. Sorry to sidebar you there. I just wanted to give you that little background of the story.
I love it. I think that's such a great story because it does speak to the battles and journeys that we all go through in business and entrepreneurship. I have a building that single tenant building in a good market, but we had a large tenant in there, and they gave us notice. This goes back last year. They gave us notice that they were not going to renew at the end of their term, and it was a single tenant building, and our burn on it was 25 grand a month between mortgage and taxes and holding costs and everything. And I was very nervous about it because you have those thoughts, and we always celebrate the wins. That's what you hear a lot, especially on social
Yeah.
media. You hear the wins about how great it was. But I remember I was really stressed out about what happens if we can't find a tenant for it. And like you said, it's things can snowball very quickly, good or bad. In our case, we were fortunate to get another tenant, and even at a raise from what the last tenant was paying, so it actually worked out well. But there's
Great.
too many people only talk about the successes when there is a lot of stuff behind the scenes where people can be really stressed out about it.
Yeah. Listen, I threw cost a little overexcited over the whole cost segregation opportunity. I bought a bowling alley, a vacant.
Hmm.
It wasn't vacant. It wasn't running. All the stuff was still there. I thought I could convert it reasonably cost effectively into retail strip, place, and couldn't do it. I mean, I won't say that it's my biggest loss yet, and I don't even know that it will be a loss because I ended up demoing the whole building. It just was going to cost way too much money to retrofit it. I was going to have way more money into it than if I just demoed the building and built a new strip plaza on the site, which I have not done yet. So it's just land. We're trying to sell the land. But every so often, everyone, my buddies and just people that I know, they're like, oh man, you got all this real estate is so cool. It must be, it must be great, and everything else. And I think, it's not all great. Like I thought I was like, I got a little cocky and I bought a bowling alley for a cost segregation study and thinking I could convert it. And it didn't work. It was like a bad decision. Now, when I sell the land, I think I'll be made whole and I'll be okay. But it's not all super easy, and it doesn't always work out either. And I've got that office building. It's a medical facility, and medical's they're all buying each other out and combining with the hospitals and everything else. And the little doctor's office type thing that I have has been vacant for 2.5 years. I've been making the taxes, still have a mortgage on it. I've been paying all of those things for all that time. Now, I will say that today I'm in a different position and I'm able to cover that kind of stuff better than I could 10 years ago. But so I don't feel so much pressure from it. But if that was my first one, that would be tough. I'd be pulling that out of my own income, and it'd be my only one. I wouldn't have all these other properties generating rent income and stuff that I could help offset some of that stuff. But I get a little down on myself or frustrated sometimes. I mean, in real estate, you're all over the board. Some days you think you're on top of the world, and then other days you just think, what am I doing? Like I don't even think I know what I'm doing. And sometimes I go on Twitter and I think I certainly don't know what I'm doing. I mean, I don't feel like the smartest guy in the room. That's for darn sure. But I'll tell you, 10 minutes before we started this conversation, my wife texted me and said, I got a great lead. I just had an awesome conversation with a potential tenant on one of our largest buildings that's been vacant since January 1. And Chad, I don't know about you, but like you get that and you're like, yes. Oh, and all of a sudden I was like, real estate's awesome. This is so much fun and this is so great. But yesterday I was looking at, I was like, oh, we have 81. I figured out our vacancy and I'm like, we're 81% leased, but we're 19% vacant. And I focus on the 19. This is the way I'm wired. And I'm like, what do we got to do to get the 19 to be 0? And then I was all, him and hawing about it one night with Nicole, my wife, and she said, you just bought a building 2 months ago and you bought one at the end of December and we're in the middle of remodeling them. You shouldn't really put them into your formulas because we haven't even put them on the market yet to lease them out. She's like, so if you take those two out of the equation, you're up over 90% leased. That's pretty good. And I'm like, okay, that does make me feel a little bit better, but it's so emotional. The ride can be just be crazy.
The real estate roller coaster, the highs are great and the lows are really painful.
Yeah.
And you're right. It's I think it is that attraction to doing deals. I think the best real estate operators are just the ones that get excited about doing a deal. It's like you said, you get a lead on a space and you're like, oh, if this worked, this would be so amazing. Or you get an opportunity to come across your desk and you're like, oh, I just get excited about this. I think those are the best investors. And I certainly wouldn't sell yourself short as not being the smartest guy in the room room, because I talk to a lot of different people all day, and I've talked to some very, very smart people. One guy that I mentioned with 3 master's degrees. I think the guys that are smart are the ones that actually just do it, because, like you said, if you have a long-term outlook and you can just hold these properties indefinitely and pay off mortgages and get some depreciation benefits along the way and some cash flow, that to me is much smarter than a guy that can do a in-depth analysis that's just fraught with many assumptions anyways. Like that, the
Yeah.
whole thing with real estate analysis is you're trying to make a 5 to 10 year projection when we don't even know what's going to happen tomorrow. We have no idea
Right.
what's going to happen tomorrow. So they're pouring over and making all these really gratuitous assumptions, just hoping that they're going to be right. When I think the smart guys in the room are you, that they're actually just going and doing it. So I certainly wouldn't sell yourself short on that. I think you are the smart guy in the room.
Well, and it is emotional. I get excited about it. That you're saying it can be exciting negotiating the deal and finding the tenant and everything else. And I don't have anything against brokers at all, but we choose to manage our own facilities. So we put them up for lease ourselves. We take all the calls. We do all the showings. We do all of that ourselves, my wife and I. And the reason why, honestly, is that there was a broker that we had used in the past, and she had brought a potential tenant through. Tenant kind of made an offer. We were exchanging back and forth a little bit. And I just said to her, I said, put me in the room with the guy. Just let me get face to face with them and we'll figure all this out in 15 minutes and we'll have a deal. And she was, oh, no. We never put a buyer and a seller in the same room together. And I'm like, and it just frustrated me. And so now when we get calls and we meet with entrepreneurs or people, usually it's the business owner that you're meeting with and going on a showing with. And I love to hear their story. I love to hear the business they're starting. I want to help them. Like that was me. There were plenty of people that helped me along the way when I was struggling back in the day. And if I can help this guy and give him some free rent or help him remodel or do this or do that or whatever, I mean, I've got 30 employees here and we're a seasonal business. And if it's November and I got 5 guys free, let me help you move. We got a truck and a trailer. We'll help you move. And I just love the experience of dealing with the tenants directly and seeing their excitement and their growth of their business. And I have one particular guy. He started off in our 3,200 square foot, one of our 3,200 square foot facilities. We moved him to a 6,000 and now he's in a 12,600 and he's renting one of our properties next door an additional 10,000 square feet. And it's been so much fun to watch him grow and develop over those years. And we've partnered with him the whole way. And so I love the interaction of it and the day to day. And I get excited to listen to other people's opportunities and their business ideas and stuff like that. And if I can just sit back and make a few bucks being the landlord and watch them develop and grow, it's kind of cool.
Yeah, I'm very pro broker and pro property manager, and I have property managers on some properties and some of it we self-manage. But I certainly agree with you is that nobody is going to look at your building the same way as you do. There's not going to be that same passion and enthusiasm as the actual owner who is literally invested in it. I've seen that time and time again. One story that just comes to mind just as a tangent. My uncle owns a cabin lodge. So it's a bunch of cabins in the mountains. And it's a really nice place. And I stayed there a number of years ago and couldn't sleep one morning. I got up around 6 in the morning and just went for a walk. And I saw him out there picking up garbage. And he certainly does not need to be going around picking up garbage at 6 in the morning.
Right.
But for him, that's just what he does. He just, that pride of ownership, it'd be very hard to pay a manager to just get up at 6 in the morning and go pick up garbage when that pride of ownership was so prevalent. And that still sticks with me to this day of him just picking up garbage at 6 in the morning.
Yeah, and those kind of situations too spill over and provide other benefits as well. Like I'm very proud of the fact that we maintain our properties really well. Like I'll seal coat every other year. I will paint. We invest back into our properties all the time. We make them look nice. I'm not a slumlord, commercial real estate slumlord type guy. I want my properties to look really good. I don't want the tenant to ever feel like, well, if the landlord would take care of this place better, I might be able to succeed more or have a better business or whatever. So we don't do too much, but we definitely invest more than I think the average person does. And that provide some benefits to us too, because there's one particular property, the one that I just bought a couple months ago. The township actually called me and said, "Did you know this building is for sale? We want you to buy it because it is an eyesore in the community, and we know what you'll do with it. And you own the other three next to it." And so I ended up buying it, and I didn't know about it at the time, and so we went there and we ended up purchasing the property, and we're in the middle of remodeling it right now. But all of a sudden, your townships and the officials start to go, you know what, we like the way these guys are maintaining their properties, and they always invest into them, and they always make them look good, and we don't have any problems with them. They put good tenants in them. We would love for them to continue to build on their portfolio, and all of a sudden now they're starting to send us leads, so that's kind of cool. And as far as going back to the broker point, I'm very friendly with a lot of the brokers in our area, and I make it very well known that, hey, I would love for you to find a tenant for one of my buildings, and if you do, I'll pay you your full commission. So they're all well aware of that, and we work with them that way. But they know that they gotta deal with us too, because we want a hand in who is going to rent our properties. These are kind of like babies for us, and we want to make sure that the person we're putting in there is going to take care of it.
Absolutely. I couldn't agree with you more on that. It does become almost like one of your children where you think about it at night. You're like, oh, I wonder how my building's doing right now.
Right. I don't want the first time I'm going to meet this person to be at the signing of the lease. You know what? I want to know them ahead of time. I want them to know us, and I want to make sure that I feel like I have a good read on people, and my wife definitely has a great read on people. And I want that feedback. I want to be able to go, I don't know, that guy sounds like he's spinning some things here, or you know what, that's a good family right there. That's the tenant I want.
It's almost a little peculiar how landlords and tenants will get into long-term relationships. It could be a 5-10 year lease without even meeting each other. The lease gets negotiated by the brokers or lawyers and probably other people involved. And the landlord and tenant don't actually meet until the first day of commencement. Like that is actually kind of a crazy thought when you
It
think that
is,
way.
because you're entering into a long-term commitment, and especially for us, these properties are personal to us, and I want to know who's going to be in them. I want to know who's going to be taking care of them. I want to know that the effort that I'm going to be putting in to update it and remodel it and make it look nice, it's going to get maintained that way on a daily basis. And that's part of the reason why I really love commercial real estate over residential. And I don't bash residential, but the pros on the commercial side of things are, I'm not getting a tenant in there for 1 year who then probably is going to leave, and I got to clean the carpets and paint and everything else. And they smoked and they brought a pet and everything else, and they left a bunch of trash behind and things like that. That was tough. I did that. I owned a duplex at one point in time, and I was like, all right, time to sell this. But in commercial real estate, that's their business. That's where they operate out of, and they want their customers to feel welcome, and they have they play a part in maintaining that property to a certain standard, and they stay for 3 years or 5 years or 10 years or hopefully forever. But that's really one of the reasons I think that I like commercial real estate so much more. And I love the business side of it. Being an entrepreneur myself, and being an owner in several companies, I love the story of the business and the tenant. And so that part of it, and the fact that they stay for a lot longer than they do on the residential side, and there's lots of other benefits. But I think I always encourage people to get involved. And I've got a buddy that's a neighbor, and he started asking me questions about commercial real estate. He wanted to get into it, and I helped him buy his first property. In fact, it was such a good cash flowing property. My wife said to me, "Why did you give him that one? Like, that would have been a great one for us." And I said, because Brett asked me if I would help him get started. And I said, yes, absolutely. And so I said, we started looking at properties together. We're emailing back and forth and texting back and forth. We found one, and we started analyzing it. I showed him how I analyzed everything. We figured it all out, and he bought it. And so that's the kind of cool stuff today that I feel like I get to do, is to help somebody else start there. And now he's hungry. Now that he's got his first one, he's texting me all the time. What did you see this one? And now I've kind of created a little monster, because now I've got a little competitor, right? And I'm like, wait a minute, I already saw that one. Are you going to bid on that? Because I was going to bid on that. So I got to start teaching people that are out of my area, I think.
Would you ever consider investing in other markets, or is it important to you to have the properties close to you?
My wife said to me one time, because I've found opportunities outside of our area, not even like within 2 miles. Or 2 hour drive. I'm talking like we might have to fly there in order to see it. And she said, I just like to be able to see and touch what I'm investing in. And so I won't say no, but I don't know. I think I would do it in a secondary situation where I'm not the main person that's managing the property and what that kind of thing. But if I'm going to go in and purchase the property and then fix it up and find the tenant, I can't do all the things that I said previously that I like to do if it's in Texas. And so I don't think that I would really venture much farther than Michigan at this point in time.
Yeah, no, that makes a lot of sense. I'm the same way. Everything that I
Yeah.
own is within 15, 20 minutes of me. So as of right now, that's been my same approach too. So I totally get that.
In an efficiency standpoint too, like we snowplow all of our properties and salt, and so everything is within really a 10-mile radius. And so if I bought one that was 30 miles away, I might have to outsource that. Well, that's, if you're paying somebody to snowplow, you're going to pay more than if you're doing it yourself, right?
Mhm.
And so then all of a sudden you have to start to change considerations and to think about expenses and stuff, things that I might send my own crew over to fix and paint and remodel. I might not if it's 2 hours away or an hour away or that sort of thing. So we've stayed pretty close to home.
Yeah, no, that makes a lot of sense. There's a few people on. I just want to give them an opportunity. If they have questions for Kip, please feel free. You can either enter into the chat or if you want to come on and ask him, please feel free. I wanted to actually pull on that one thread that you mentioned about you do the snow clearing yourself. Have you looked to do any businesses that relate to your portfolio? So like an HVAC company, start an HVAC maintenance and sales company, because I'm guessing you're probably turning over HVAC units fairly regularly, or anything similar to that. Has that crossed your mind at all?
Not exactly. I focus a majority of my time on uh, my main business that I operate out of this, the Blue Thumb, which is the pond waterfall fountain company. And so I look at acquisitions to grow that part of the business, because then from that sheds off the cash then that I use to buy commercial real estate. And I look at if I were to buy an HVAC company or buy a landscape, if I bought a landscape company or started a landscape company, you're adding a lot more employees, um, which can be challenging. Those type of employees are hard to find, and there's a lot of turnover at times. And so I really haven't looked at doing that sort of thing. There was at one point in time we talked about buying a big trailer and having a couple of lawnmowers and stuff and going and doing our own maintenance. But honestly, the guys that do it for us do such a great job. They're so good at it. And when I look at the costs of it, I don't feel like there's enough savings there for me. Maybe at my size and scale, I don't think there's enough savings for us to justify that. But what we will do is our guys will do a lot of demo work. We can do light remodel and carpentry type work. But then after that, I just kind of hire out to the experts.
Yeah. Well, maybe if your portfolio reaches a scale, maybe it does make sense down the road.
I do want to own 50. That is my goal, is to have 50 properties at some point in time. But I'm 51 years old. And so I don't know, I'd have to get on a pretty aggressive pace in order to do it. But I have 3 daughters. And I think, you know what? I have a just graduated last night, senior. And then I have another daughter going into 11th grade and one going into 8th grade. And I think, well, maybe if they become interested in real estate, they can help us really ramp up and start to acquire more properties. But we'll see.
Do any of them have that real estate itch or entrepreneurial itch at this point?
They've got more of an interior design itch, I would say, more than they do real estate itch. But there are signs here and there about entrepreneur, possible ideas in their head. I don't try to push them in any one direction. I tell them the number one thing you need to do is to find something that you love to do. If you go to work and you love what you do every day, you will become great at it. And when you become great at it, you will get a return on it. You will reap far more return than you will in any other career. And so if that's here running our main business, or if it's running real estate or any of our other endeavors, then so be it. But it won't be coming from me saying, "Hey, why don't you come to work with me today and see what we do and see if it's something that you want to do." I don't want that. I don't want to force it on them or introduce them to it. They see it. You know, they're around. The conversations spill over into dinner, and you know we drive by a property and they go, "Dad, don't you own that one?" You know, and stuff, and they're starting to get to the age where they think it's cool now. Like they're kind of like, "Oh wow, that's pretty neat." You know, that's a big building, you know, kind of thing. And so I think once they get to that certain age and they want gas in their car and Starbucks and Target visits and stuff, they start to think, how can I best make some money? and and they hear mom and dad's conversations often enough that I think that it piques their curiosity at times.
Yeah, I bet it would. You got a clap from Vish who on that on the advice and parenting approach that you take, and I would completely
Yeah.
agree. I think that's just the best way to do it. Find something that you love doing, become the best at it, and you'll not only will you just be happy, but you'll profit from it and enjoy it that
Yeah.
much more. So I think that is great advice.
I tell our employees that here all the time. I'm like, we have very few degrees here. Most of our employees don't have bachelor's degrees, never went to college or mine, you know, a little bit of college. And I tell them, I'm like, listen, you're really good at this particular job function here. Like you're great at it. And you seem to that you like to do it. And the better you get at it, the more I'll pay you. Like you become indispensable to me. Like I want you to help you be great at your job if you love doing it, and I will help you make as much as you can make anywhere else. And that's just how we have very low turnover here. We I can't remember the last time I had one guy leave a month ago, but he was 71 years old, and he was like, I don't want to. He was working part time, and he just said, I want to retire. He had lost his mom, and he's like, I just want to retire and go fishing. And I was like, well, then you should. That's a good reason. But aside from him, we haven't had any turnover in several years, and I think it just speaks to how you treat people and giving people good work to do that they can make an honest living at, and being flexible with them.
Yeah, I think that's such a great approach to life and business in general. So yeah, I applaud you for that. So if you're at 14, goals to get to 50, you need 36 more properties to add.
Yeah.
Well, I'm guessing you've got to start looking all of Michigan. Is that the approach?
Um, it, Not necessarily all of Michigan, but looking at Bay City and Midland and possibly the Flint area. We've started to look in some of those areas a little bit. Um, I've started to expand. I've been so focused on industrial warehouse type properties. I have I just purchased my second retail property, and then I have the one office. But I would like to get more into retail. And so for years I've had blinders on just looking at warehouses, right? And I never really, and I drive by all these retail stores and then I get to the warehouse district, you know, and I start looking at the warehouses, but I passed up all these opportunities along the way. And so we started to look at some of those, and you know, I'm sure everybody's heard of the strip mall guy, and I started following him, and then I started learning about strip malls, and I'm like, I want to buy a strip mall. You know, and so at one point I wanted to do self-storage, and you know, but again, let's not be emotional about real estate. Let's go back and think about this before we just, you know, fire aim. And and so I can see us starting to open up the type of properties that we invest in, which then will open up opportunities within the same areas that we're already operating in. And so I love retail. I think for a long time I thought retail was going to die because of the internet, you know, and I believe that. And now I'm like, no, people still like to go and touch things and pick things up immediately and shop and have a good experience. And so if you can find the right retail plaza or retail uh, property that has a good tenant in it that's creating that type of an experience for people, I think that's cool, and that's a good investment long term.
Yeah, well, we might have to follow up with on this in a year or so and see if you've
Yeah.
made more of a switch towards retail or if industrial just keeps pulling at you. Because I'm the same way. I love industrial, but I'm not adverse to looking at other opportunities. If something makes sense, then yeah, why not consider it? Maybe you don't go forward with it once you unravel it all and look at it more, but certainly be opportunistic. I think that's just a good approach to have.
Yeah. a good buddy of mine convinced me to become a partner with him. I was just a small minority partner in a Jersey Mike's franchise, and we have about 10 or 11 locations now. And so we've been talking with him about he wants us to help him find locations to pop in his next location at. And so we've been talking to him about, well, what about this area? What about that area? And trying to figure that out so that we can become the landlord for him. He'd prefer me be the landlord than somebody else. And so we look at opportunities like that. I look at a spot where he's going to put a location in, and maybe I try to go buy that property. And so those are some of the fun things that we're starting to explore from that standpoint, because you get a Jersey Mike's and they want to sign a 10, 15-year lease. And so that's great. And they drive a lot of traffic to the plaza, which then will help the other tenants that are in there. And so we started to really look at a couple of different strip plazas. I haven't pulled the trigger on one, but it is one of the two that I mentioned that I was seriously considering right now. The one that I've been looking at is about to go up for auction next month. And so I'm not sure that the auction price will be where I want it to be. I have a number in my head of what I'm willing to pay, but I feel like sometimes on these auctions, people get emotional and spend more than they should. And I also think there's a lot of out-of-state money that comes in and influences the auction prices at the end. And I haven't always found those to be great opportunities to find long-term hold properties.
Yeah, well, and you've said it. Oh, Fish, did you have a question?
Yes, yeah, probably once we're done talking, I have a question.
Sure, if you want right now, feel free to go ahead.
Well, my question is, Kip, I've been looking at industrial. One second. Yeah, I've been wanting to invest in industrial warehouses for a while. I've had some experience with multifamily, and I very much in sync with whatever you told about residential. And I want to just move hands off and have a long-term tenants, so that way my income and expenses both are predictable. And so with that being said, I still haven't. I've been making a lot of LOIs, but I haven't got any deals so far. Now, how do we reach you, and can I consult with you for your feedback?
Yes, absolutely. Probably the easiest way to reach me is on X.
Okay.
I should know my handle, if you will, but I think it's at Kip Northrup. So it's pretty simple. And Chad follows me, and you can reach me through there though, and send me a message. And I'd give you any knowledge that I have. I'd be happy to help.
Yes.
Well, yeah, I definitely appreciate you talking and telling us your feedback and how you started, and you're 51 and you want to have 51 deals, and I love that, because I love that. And
so
we
I have a
all
question
get
for you.
Yes.
You've said you submitted some LOIs. What was the reason? Is it just price is the reason that you haven't been able to execute on them?
Well, the price is the main point, because I don't want to pay retail, and I've been very aggressive when it comes to pricing, and also I try to be creative and all these things, because my buy box is I want to have multi tenants, and the type of lease makes a big difference, and I only want triple net, and occupancy has to be 50% or more. And since I was buying the buildings all by myself, and my price cap was $1 million or less, and if I suspect there's some amount of stress in the property, or it needs a lot of TI, and I was pushing the seller for seller finance, but not all the sellers were comfortable with their terms, and in some cases the sellers wanted to do a seller finance, but they wanted a 10% interest or more, which I told them, in that case, I'll give you 10, but I'm going to do interest only for 2 years. Would that work? And so that way, I tell them, you're still not losing your money. You're still getting your money. But the only thing, I'm not doing any principal pay down. But not everybody are comfortable with my terms. But 90% of the time, it has been the price point.
Okay. Yeah, I think a lot of the things that you mentioned would be very much in your favor and not so
Right.
much in the seller's favor. And so, as far as looking at you've almost identified what would be the perfect deal if they met all your criteria in that situation. And sometimes the perfect deal doesn't look perfect on day one, right? It's 3 years, it's perfect, but today it's not so perfect. And sometimes you got to find, some with some vacancies. Maybe the leases aren't triple net, and maybe they're a modified gross or some kind of a gross lease. But over time, you can start to put uh, triple net leases in place and build value that way. So sometimes you have to be careful not to be so specific with what your requirements are on the investment, and be a little willing to, because that's where you're going to get the best deal on price. Is if you had triple net leases in place and they're long term, 15 years or whatever, you're going to pay a premium for that. All you're buying then is you're buying a cap rate at that point, in my opinion. And I don't feel like there's big opportunities for guys like me in a cap rate situation. Like I don't look to buy a Starbucks with a 20-year lease at a 4.5 cap. That is zero interest to me. Even if it was a 6 cap, I'm not interested. I'm interested in buying a property that's, like you said, maybe it's 50% tenants, and I got to invest a little bit of money in it over the years, find new tenants to put in there. And all of a sudden, I'm earning a 15-20% return on my money. That's what I'm looking for, long term. And so I would initially, just off our conversation, just say, be careful not to be so focused on the requirements that you had, because sometimes there's opportunities in deals where it's not a triple net lease, but it could be when the lease runs out, or you could swap tenants and get a different tenant in there, or that type of thing. But I like the fact that you're looking, and eventually you'll hit on one. You'll get one, and once you get one, it's easier to get a second one. And the first one's always the hardest, I think.
Well, yeah, I really appreciate your feedback. I think that makes a lot of sense because you looked at the same deal from a different set of lens. But definitely, I'll start probably lowering my standards and look for those hidden gems right there in those opportunities, those deals.
Yeah.
Right.
Yeah, if you get
And
one though
then,
that you're considering, you can send it over to me, and I'll give you my honest feedback on it. I'll give you my opinion.
yeah, yeah, please. And Chad has been a great resource, and it's like me doing a PhD, and that is why I try not to miss his calls every Friday because there's so much learning which is happening. And his book has been wonderful help. His book has
Yeah.
been excellent.
Thanks,
Thank you, Chad.
This one?
yeah.
Yes, exactly.
Thanks, gents.
Yeah, I'll get your details from Chad. No problem.
Yeah, we did put it in the chat as well, Vish, where you can find him on X, and we'll put it in we'll send it out as well so that you have it. But yeah, I love it on everything Kip answered on that, and it's been great having you in this community too, Vish, because you say that you learn, but I learn a ton of stuff from everybody, like guests and members as alike. So I've thoroughly enjoyed this community, and getting to talk to people like Kip is one of the reasons that I just love doing it. I love hearing how other people have had success, and wasn't always a straight line. Sometimes it's you got to almost connect the dots, and it's not a to B. There's a few things in there, and maybe it's an A to Z kind of thing. So yeah, we're a few minutes over, and I did tell Kip an hour, so we'll wrap this up here. But I just wanted to extend my thanks to Kip once again for sharing such great insights. I could easily talk to you for another hour. Just
I could do, yeah.
so many different things that we could explore. So we'll have to do a part two if you're up for it down the road. And yeah, thanks, Kip. I really do appreciate your time on this.
You are very welcome. Hopefully I've provided some value to some people, and there's some positive that comes out of it. So I appreciate you having me on. Thank you.
Yeah, tons of value. I loved it. Thoroughly enjoyed every minute, and looking forward to part two already. So thanks for tuning in, everybody. Kip, especially for you. Thank you very much once again for your time.
You're welcome.
Okay. Thanks, everyone.
Bye.
Thanks, Kip. Bye.